We finished the week on top of critical support, and if we break down from here, we could be heading back into the bear market. So first up, let's take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we did close the week down 1.07% on Friday, and we are right on top of that lower Bollinger Band and right on top of that 200 daily moving average. So you can see from the price action, we're starting to get the first daily close below the support trend line that connects the lows from December back to October. So if we continue lower and break down below this 200 daily moving average and the retest of the bear market resistance trend line, it will look like we're going back into the bear market, which means SPY below 393 means we could revisit the lows at 376 and possibly even all the way down around 356. So this is a very critical risk level, and I do want you to pay attention to the fact that we are holding support and we are getting a very slow sell-off, which is more than likely just a pullback. If you just look at the high back on February 2nd to where we close on Friday, that is not even a full 5% decline over 15 trading days, which is exactly the slow type of pullbacks that you get in bull trends. For example, if you go back to this decline where we closed down here, only 4 trading days, we closed 5.5% lower. That was much more of a waterfall wave of selling lower. And then we did build out this bear flag, which looked like we were going back into the bear market and going to break down and head to lower prices. And we started to skyrocket out of the lows and put another higher high. So when you look at how slow this sell-off has been, 15 trading days to not even drop a full 5%, and now trading above what's about to be a positively sloping 200 daily moving average, there is a very good chance the bulls make a stand here. Now, obviously, we're going to let the price action do all of the talking, and if we slice down through that support, we're instantly getting more bearish that we're heading to lower prices. But for the time being, I think you need to give the bulls the benefit of the doubt, and you need to consider the possibility we are going to see strong buyers from this level. So on SPY, use that critical risk level at 393, and the bulls need to bounce from this level and break back over 400 and then fully go close that gap at 408 and then break the resistance trend line. If the bulls can do all of that progress towards those upper prices and get the breakout, we will be looking for the 420s all the way up to the 430s, anywhere between the end of March and early April. Now, if the bears succeed and we break down below 393, we will be looking for a retest of the lows from December, which is going to take us back down to about 380 to 376. So no both scenarios, and let the price action do all of the talking around that level at 393. On the NASDAQ 100 triple Qs, we were down 1.67% on Friday, and again, we're seeing very high volume, and we're sitting right on top of that 200 daily moving average at 290. Again, just like SPY, that's the critical line in the sand, and you can stay bullish above that level. And if you look at the triple Qs from the February 2nd high to where we closed, we're only down about 6.3%. over those 15 trading days, and we're sitting right on top of critical support. If we break down from here, we could fill the gap at 288, and then we have another gap down here around 273. So those will be the downside prices if we lose this critical support. The bulls need to get back over 294, close the gap at 303, and break the resistance trend line at 305, and then we should be off to the races towards 322. On the Dow Jones, we were down 1.07% on Friday, and we're at that critical support of the bull flag at 327. And if we break down below this, we're coming down to the 200 daily moving average at 323, and then retesting the resistance trend line, which is now support at 320. Below that, we could fill the gap at 311, so there is going to be plenty more downside if we lose critical support. From here, if we start to bounce, we'll be looking for critical resistance at 335, and then above that, we'll need to break back over 343 and 346. On the Russell 2000 IWM ETF, we were down 0.94% on Friday, and we did hold above the support at the rising 50 EMA at 186. The bulls need to get back over 188 and the resistance trend line at 192, and then we're breaking out of this pullback, and we could go see prices in the low 200s. If we break down below support at 186, look for support below at 185, and then the gap fill just below 181. On the ARKK ETF, we were down 3.08% on Friday, and we did break down to a lower low, which is the close below 39. So we now have a short-term downtrend of a lower high and a lower low. This means we could be heading lower to lower prices, and we do have a gap to fill just below 32. So you need to be very risk off in ARKK while it's trading below 39. If it can break back over 39, it still has resistance at 40.4 and the resistance trend line at 41.4. So we need to break all of that resistance before we can break out of this pullback and start going to higher prices. If we lose support at 38, look for the next target lower at 36.8 and 34.6. On the VIX, we were up 2.51% on Friday, and we see the VIX is still closing above 20, which tells us we need to remain cautious because the VIX above 20 tells us we could be going back into the bear market. If we see the VIX crushing all the way back down below 20, that will be a bullish indication we're going back into the bull trend. So watch the VIX closely because it is going to be a great indication of whether we're going into a bull trend or going back into the bear market. On Bitcoin, we're currently down about 0.78%, and Bitcoin is sitting right on top of the support trend line, which is right here at 22,800. Below that, we have support at 22,409 and 21,300. And if we lose all of that support, we're coming back down to the 200 daily moving average at 19,800. The next bull breakout will be above 25,000, and then we could start marching higher towards 30,000. On Amazon stock, we were down 2.42% on Friday, and Amazon is losing that critical support just below 94, which means we could see the gap fill at 90. This is a very strong support zone between 90 and 94, so it is possible to buy at this zone knowing your risk is below 90. If we break down below 90, we could revisit the lows just below 82. The next bull breakout will be above 98 and 102, and then we'll be looking for prices at 109 and 115. On Microsoft stock, we were down 2.18% on Friday, and we did lose that critical support at 252 to 250, and we closed about 80 cents lower, so it could be possible Microsoft is trying to break down. A breakdown from here below 250 could bring us back down to 242, and you're only getting bullish if we could start closing back over 252 for a retest of the highs at 258 and 262. On Nvidia stock, we were down 1.6% on Friday, and Nvidia is doing a very good job holding on to those gains after the earnings, and there are a lot of short sellers in this stock that are trying to cover and get out. From here, we need to break back over 237.6 to get to our next target higher at 242, with the critical downside support at 230 and 227. And if we break down below support, we could come all the way back down to the gap fill at 211 with support at 213. On Tesla stock, we were down 2.57% on Friday, and we're right on top of critical support right here at 196. And if we break down below 196, we should easily get back down to 183 and then 173. There's going to be very strong support in this zone, and it is possible from here to bounce from this support and still go reach our target at 230. On Apple stock, we were down 1.8% on Friday, and we did fully close the gap at 146, and we are very close to fully reaching the double top price target, which could take us down to about 145. So with the double top price target being met and the gap filled to the downside, it is possible Apple does find support around 145 and start to bounce higher back over 150, reaching our next target higher at 156. If we lose support at 145, we're likely coming all the way back down to 141. On the financials, we were up 0.08%, and the financials still look like they're breaking down below the bull trend and now finding resistance below the 50 EMA, so you need to continue to be cautious in the financials while they're trading below 36. On the industrials, we were down 0.57%, continuing to break down and now trading below the critical resistance, which is right around 100.57. A continuation of more downside from here could take us back down towards 97. The healthcare sector was down 1.29%, continuing to break down and continuing into this downtrend, which is now following out of the downtrending channel. Be cautious here because this is starting to look like a bear trend that is picking up momentum, which could take us down for that next leg lower. The energy sector was down 0.13%, finding support just above the rising 200 daily moving average, and you can stay bullish as long as we're above 82.6. If we lose that support, the next leg lower will be 80.5. So jumping back over the SP 500, this is very critical support for the bulls, which means there will be a great risk reward setup for long trades, and you instantly know you're wrong if we start breaking down below 393. For that reason, there's a good chance we see buyers in bullish strength into next week until we lose that critical support, and then the bears have the upper hand and can easily drive prices to much lower prices. So let the price action do all of the talking, and if we lose the critical support, we will be looking for a continuation of this downtrend. If you want to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. I also have Bank Trade Alerts, which is an algorithm-driven trade alert service that sends you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.